Hello, my name is Rose Howley. I'm the Payroll Business Development Manager for MBKB, and I'm presenting this webinar to you today on expenses and benefits. This should last approximately 45 minutes. Hopefully you can find this enjoyable and worthwhile. So what are we going to be looking at today? We're going to be looking at basically forms, the various forms that we have to submit in respect of expenses and benefits, some concessions and exemptions, Class 1A liability, which is an employer's liability, and the various sections on the P11D form itself. Okay, so expenses. So expenses that we incur wholly, exclusively and necessarily in performance our duties can be reimbursed by our employer, and it can be free from tax and NIC if it's a specific amount that's covered by exemptions. So, for example, our employer can reimburse us up to 45p per mile for the first 10,000 miles that we do utilising our own personal vehicles. Okay, and there'll be no tax or NIC chargeable to that element. However, if they weren't going to reimburse us 45p per mile, let's say, for example, they only reimbursed us 40p per mile, we could claim tax relief on the other 5p that they didn't reimburse us. However, as far as NIC is concerned, we would not be able to claim any NIC relief on that 5p that they didn't reimburse us, but we could claim the tax relief. Benefits are benefits basically our employer provide us by reason of that employment. So it could be a company car, it could be private medical insurance. And if they provide them for our spouse, partner, children, parents, etc., then also that would be chargeable to the actual employee. And there is a method of calculating the value of that benefit in kind, which is prescribed by law. The various forms we're going to be looking at is going to be the P11D form, P11DB, and the P46 car. We're going to be looking at the various sections of the forms, and we're going to be looking at penalties if we fail to submit or we submit inaccurate returns. As far as the P11D form goes, that's where we're going to be reporting the value of the benefits that we provide to our employees or their family members and directors. At one time, there was an earnings threshold where we didn't have to report benefits. That is abolished, so we no longer need to take that into the equation. And we do have to consider anything which has been provided to our employees by optional remuneration arrangements, basically means salary sacrifice. And we have to report the higher of the value of the benefit in kind or the amount that's been sacrificed unless it's covered with a concession. This is a snapshot of the P11D form that we will be submitting for each employee that we complete benefits for. So on the front of the form, you have to put the employer's details together with the employees, and you have to put a tick in the box if they are a director. As you can see, we also need to put the date of birth of that individual employee and the national insurance and gender. On the P46 car form, we have to provide the employee's details, details of the car we're providing or a car that's been withdrawn or replaced, or details of a second car that may be provided to the employee for private use. So we have to put down the make and model, engine size of the car, the emissions, the fuel type, whether it's petrol or diesel or electric, the list price of the car, any additional accessories, contribution paid by the employee for private use, and the fuel that's been provided for private use. And this form needs to be completed within 28 days of the quarter end. So the quarters, 4 quarters in the tax year, one covering April, May and June. The second quarter would be July, August, September, and so forth. So 28 days is what we have when we have to provide this P46 card to HMRC following the quarter end. This will enable HMRC to work out the value of that benefit in kind and adjust the employee's tax code accordingly, so they're being charged the correct amount of tax on that benefit in kind. P11DB is where we disclose and report the liability of Class 1A. It's also a declaration to confirm that we've reported the correct amount of benefits and expenses paid to that employee on the appropriate documentation. Now, if we are payrolling benefits in kind that are liable to Class 1A, these we have to report also on a P11DB form. And this here is a snapshot of the P11DB form for 21-22. Here you're going to be reporting the value of the benefits that are liable to Class 1A, and you're going to be putting down and reporting the liability of the Class 1A. Now, both the P11D and the P11DB form is due to be submitted and received by HMRC by or before the 6th of July. And if we fail to submit those returns, we can be charged up to £100 per block of 50 employees for the whole month of part month. And if we submit inaccurate or false returns, we can be charged a penalty up to £3,000 per form. So that's going to be quite significant if we've got a number of employees that we've failed or to report or put false reports in. Now, the P11D form can be submitted via paper or online. Now, we were able to utilise HMRC services to submit this return. This is no longer available to us, so we either got to use our software or hard copies. Now, as we know, P11D benefits can be payrolled, can be processed via payroll. And if they are, that's fine, not a problem. But we have to report the value of those benefits that's been processed via payroll on the P11DB form if they are liable to the Class 1A. And some concessions and exemptions. So late night journeys from work to home, if we're providing taxis, as long as those late hours that we're working is not part of our normal contracts. Okay, they're covered with a concession. We've got small gifts by third parties, annual functions such as Christmas parties, summer barbecues, up to £150 per head per year. It's covered by a concession, it's not taxable. Board and lodging for agricultural workers, certain termination payments and legal costs, compromise agreements. Home workers can claim tax relief or be reimbursed by the employer up to £208 per year up to the 5th of April 2020, which is now increased from 2020 to 312. We can back claim this up to 4 years if we haven't claimed it before. We've got some benchmark scales rate, which is covered by concessions for meals. So if you travel up to 5 hours, you can reimburse your employees up to £5. If they travel more than 10 hours, £10. 15 hours or more, £15 per meal. Now, in total, though, the amount that we can pay them per day that's covered with this concession is £25. Now, this is HMRC's benchmark scale rates. We can, of course, claim our own benchmark scale rates, but to do this, we have to look at a certain proportion of our employees, look at a 3-month period of the expenses they claim, and then put this to HMRC and ask for revised scale rates to accommodate your business. Obviously, HMRC has to approve this, and if they do, then you can claim a different amount. Now, the Class 1A is an employer's liability only on some benefits in kind. For 21-22, it's 13.8%, and for next year, for 22-23, it's increasing to 15.05%. So we need to budget for that. The P11D form itself, we're going to go through the various sections. So Section A is transfer of assets. So you have to give a brief description, the market value, the amount the employees paid you from taxed income, and then the cash equivalent. So it's a brown box, that means it's liable to Class 1A. One of the common assets that's transferred is bicycles, cycle to work schemes. So this is where an employer has allowed an employee to sacrifice a certain amount of their income in exchange for the bike, which they're using to get them from home to work. Now, if you're transferring it, bike, the ownership, if the bike's only 1 year old and the value when it was purchased was less than 500, it's going to be 18%. If it was more than 500, it'll be 25%. So if you've got a bicycle which is only 1 year old and it cost £500 when it was purchased, 18% of that would come to a value of £90. That would have to be reported in Section A. If, for example, the bike was in excess of £500 when it was first purchased, so let's say £100, you'd be saying, well, it's got to be 25% of the original price, which would come to 250, and that's what would be reported in Box A. And therefore, the employee would be taxed on that as a benefit in kind. Box B is basically payments made on behalf of an employee. So you have to give a brief description and the value, or the tax on notional payments. You can see there's a blue boxes. This means that they're liable to Class 1 via payroll. So payments made on behalf of an employee, that's known as pecuniary liability. So this is where an employer has paid a personal bill in relation to that employee. Now, tax paid by employer on notional payments, such as shares, gold bullion, etc. Okay, so anything that's readily convertible assets. Now, there'll be no benefit in kind reportable if it is repaid by the employee within 90 days of year end. Box C is where vouchers or credit cards are being utilised by the employee for their personal use. So you can be reporting three things here: the gross amount of foregone, the amount made good by the employee from taxed income, and then the difference is going to be the cash equivalent. See, it's a blue box. Anything reported there is liable to Class 1 via payroll. Some of the other things, it's going to be the amount reported is the cost of the provision, anything that's exchangeable for cash, exchangeable goods for services, or the company credit card, which have been utilised for private use. Box D is where you'll be reporting living accommodation, so the cash equivalent or relevant amount of accommodation provided for the employee or their family. And again, it's just reminding you, exemptions do not apply if you're using optional remuneration arrangements, that's salary sacrifice. So when you're working out the value of the living accommodation, the amount that you have to report in Box D, there is working sheets that HMRC provide to help you work out the value. Now, if you're just paying rent as an employer for the employee's cost of providing that accommodation, it's just going to be the value of the rent. If the employer owns the accommodation, then it's much more of a difficult calculation. So the first 75,000 of the cost of that property is covered by the rateable value. Okay, the rateable value can be found on your water rates bill. Otherwise, you have to apply to HMRC to work out what the rateable value is. So you'd be taking the first 75,000 because that would be covered by the rateable value, and the excess you would have to apply the official interest in working out the value of that property, and currently that's 2%. Section E on the P11D form, this is where you're going to be reporting the mileage allowance and passenger payments. Known as AMAP, approved mileage allowance payments. And it's only the excess that you're going to be reporting in Box E. So the amount that is covered with the concession with HMRC or exemption is 45p if you're utilising your own car for business rates, for business travel. Okay, so you're allowed 45p by your employer for the first 10,000 business miles, If your employer does not reimburse you 45p, let's say, for example, they only reimburse you 30p per business mile, then the other 15p you'll be able to claim tax relief for. As far as NIC goes, your employer can pay you up to 45p for whatever mileage you do, and there's going to be no NIC liability. If you did 20,000 business miles in your own car and your employer was going to pay you 45p for those 20,000 miles, then there'd be no NIC liability if the employer chose to reimburse you that value. However, if they paid you 45p for 20,000 miles, then the 10,000 miles, your employer would have to tax you on the difference between the 25p and the 45p. And you can utilise those values when you're working out what's taxable in respect of car user allowance and motorbikes and cycles. So the amount HMRC allow you, the employer, to pay your employees without charging them tax are these rates here. For your cars and vans, 45p, as I mentioned previously, for the first 10,000, and then up to 25p for anything over and above the 10,000. Motorbikes is 24p, cycles for business travel is 20p. And if you're carrying passengers, you're allowed to pay them an extra 5p. So, for example, if I had 3 people in my car, I was driving it, and 2 other passengers for a business meeting, for the first 10,000 miles, my employer could reimburse me 45p plus 5p for each of those passengers. So for that business journey, for the first 10,000, they could reimburse me 55p if there was 3 people in that car. Now, if you've got a company car, you can reimburse them these values in respect of business journeys. These get revised every quarter. Okay, so from the 1st of June 2022, for petrol, for vehicles up to 14cc or less, it's 14p per mile. If the engine size is between 1401cc up to 2 litre, it'd be 17p. And over 2 litre, 25p. And then you've got your diesel rates and your LPG rates. Hybrid cars, which is a combination between electric and fuel, depending on the fuel, whether it's petrol or diesel, these are the rates. Now, for company cars, you have to complete box F. As you can see, there's availability for 2 cars to be reported here. This is where an employee changes their car during the course of the year. So they want the make and model, the date the car was first registered, the approved CO emissions. They want to know the mileage that a vehicle can do on a fully charged battery. If the emissions are between 1 and 50 grams. They want the engine size, the fuel, whether it's petrol or diesel or hybrid. They want the date the car was available from and to. They want the list price of the car. They want any additional accessories, capital contribution up to a maximum of £5,000, amount paid by the employee for private use, the date the fuel card was withdrawn, cash equivalent of relevant amount for each car. Then it wants the total amounts for the car and the fuel. Now, the list price, they want to know the value of that car when it was first provided, and any classic cars, it wants you to use the market value if it's worth more than 15,000. Also wants you to include any costs in respect of VAT or other taxes, delivery, number plates if they're private, optional extras, and accessories added to that vehicle after it's been first provided, if it's in excess of £100. And from April 2020, additional information may be required for hybrid cars with CO emissions between 1 and 50 grams. So they want to know what miles can that car travel on a fully charged battery. Now, there's a table we need to use basically for cars registered on or after the 6th of April. So it's Worldwide Harmonised Light Vehicle Test Procedure, and the acronym is WLTP. And cars registered before the 6th of April, New European Driving Cycle, and the acronym there is NEDC. So here we've got a table the HMRC provides. So vehicles with CO emissions between 1 and 50 grams, it wants to know what mileage it can travel on a fully charged battery. Okay, so for the 21-22 P11D reporting, if you've got a hybrid car that can travel up to 130 miles plus, if the vehicle was registered before the 6th of April, it's going to be 2%. After the 6th of April, it's going to be 1%. If it can travel between 70 and 129 miles, it's going to be 5% or 4% of the list price, and so forth. The maximum percentage you're going to take into the equation is 37%. And if it's diesel, you may have to add on an extra 4%, but never will you charge anything over and above 37%. And here you've got the table for 22-23. It's important you utilise this table if you're payrolling benefits in kind. However, it makes no difference now whether the car is registered before or after the 6th of April 2020, as the percentages have now been aligned. So that's the percentage of the list price, maximum being 37%. Okay, for all car drivers, diesel car, you must add on 4%, unless the diesel car meets the real driving emission step 2, RDE2, then that's 4% supplement does not have to be added. Pure electric cars, the benefit in kind is going to be 1% for 21-22 of the list price, and that's going to go up to 2% for 22-23. The fuel, you're going to be applying the percentages that you've utilised to work out the car benefit in kind. You're going to be applying that to these fuel percentages. This is fuel cars that's provided to employees for their private journeys. Okay, so you can see for 2020 up to 2022, we've got basically the fuel rates here. Electric cars, the electricity that you're providing to charge up the electric car is going to be exempt up until 2023. If a car is not available for the whole of the year, you're going to prorate the value of that benefit in kind by reducing it by the unavailability. If the employee reimburses the employee for private use, again, you're going to be reducing the benefit in kind accordingly. Pool cars, these are cars that are provided to an employee and not solely for one employee, but several. Okay, and any private use should be incidental. And when they're utilising this vehicle, it should not be kept at their home for more than 60% of that time. If it is, then it's going to be categorised as a benefit in kind. If it's not, it'll be classified as a pool car and no benefit in kind will be charged. For vans and van fuel, these are going to be reported in box G. The standard van benefit in kind charge is going to be 3,500 for 21-22, 3,600 for 22-23. Zero emission vans does not make any difference at this moment in time. It's just the rates at the top of the table, above the table. The van fuel benefit in kind is listed here. So for 21-22, it's 669, 22-23, the current tax year we're in is 688. The interest-free and low interest loans, these have to be reported in box H. And you've got availability to report 2 loans. So you've got the number of joint borrowers, if applicable, the amount outstanding at the 5th of April 2021, or the date the loan was made if it was after that, the amount at the 5th of April 2022, or when the loan was paid off, the maximum amount at any point in the tax year, the total amount of interest paid by the borrower, in the year, the date the loan was made, if it was in the after beginning of the year, the date the loan was paid off, if it was before the end of 2022. And then it wants to know the cash equivalent or relevant amount of loan after deducting any interest paid by the borrower. So here it's the interest that is basically categorised as the benefit in kind. Now these only have to be calculated for any loans that is equal to or greater than £10,000. And with the loan, you're going to be calculating the value of that interest by utilising HMRC's interest rate, which is currently 2%. Any loans written off or waived, that has to be reported elsewhere on the P11D form, which we'll be looking at later. Now, there's two methods of calculating the interest. You can use the averaging method or the precise method. HMRC assumes that you're going to be utilising the average. If you're going to be utilising the precise method, that means you're calculating the value of the interest element of that loan for each day in the tax year. You need to report that to HMRC. Here in box I, you're going to report in the medical treatment or insurance that you provide for your employee. So you've got three boxes here. Again, it's the brown box, the cost to you or the amount foregone, the amount made good from taxed income, and then you've got the cash equivalents. Okay, and that's going to be reported in box I, and you can see it's a brown box, liable to class 1A. So here you're going to be reporting any costs or medical expenses that you, the employer, has paid, checkups and treatment and insurance premiums. You're going to exclude period medical checkups and treatment for employees outside the UK. And we've already identified it's liable to class 1A, NIC, employer's liability only. You're going to be reducing it by amount made good by the employee from taxed income. Now, there is some exemptions you need to be aware of that is not reportable. So eye tests, if you're paying towards somebody's glasses, the cost of the glasses, if it's for visual display for the computers, and health screening, those are covered with an exemption. In box J here, you're going to be reporting relocation expenses in excess of £8,000 for qualifying relocation expenses that you paid on behalf of your employee. Any non-qualifying expenses need to be reported in sections M or N. So what is relocation? That's basically where an individual has changed where they live to a different location to carry out their job. So if I lived in Birmingham and worked from the Midlands office, and then I was requested by my employee to relocate to London to work from the London office, that would be relocation. I'm changing my living premises. Now you have to identify what qualifying expenses are. So it could be paying surveying fees, solicitors, could be looking at incurring expenses for rented accommodation in a different area, so I can find somewhere that I want to live in, a relocation. This £8,000 qualifying expenses must be utilised before the end of the tax year where the relocation has taken place. So if I relocated in 22-23, I'd have to utilise that £8,000 before the end of 2024. Services applied, this has to be reported in box K. Okay, cost to you, the employer, amount made good from taxed income from the employee, then the difference is the cash equivalent. You can see it's a brown box, liable to class 1A. So services applied, there may not be any cost or anything to report to on the P11D form. So for example, if I worked for West Midlands Travel and I was utilising the buses and they didn't charge me anything, the buses would still be travelling anyway, so there'd be no cost. Staff discounts, as long as I reimburse my employer the wholesale cost, no benefit in kind. School fees, if I work for a private school and my children were allowed to attend that school, as long as I was charged 15% of the normal school fees, there'd be no benefit in kind. If I wasn't, you'd have to work out 15%, and that's the Pepper versus Hart principle of what paying parents would normally pay. That didn't work there, and that'd be the value of the benefit in kind. And free professional services, if I worked for a solicitor's company as a payroll manager, and I was allowed to utilise some of the solicitors' professional services for free, would be no benefit in kind because the solicitors would be working there anyway. Assets placed at the employee's disposal has to be reported in box L. You have to give a brief description. Again, you've got 3 boxes: the cost to you, the employer, the amount made good from taxed income by the employee. The difference would be the cash equivalent of the benefit. See, it's a brown box, liable to class 1A. So the main principle is you'd be looking at the value of that asset when it was first provided to the employee for private use, and you'd be taking 20% of the original market value, and that would be the value of the benefit in kind. Any additional costs to the employer would have to be added on to that. Now, if it wasn't available for the whole year, you'd apportion it accordingly. Obviously, if it's covered by an exemption, there'd be nothing to report. Box M is other items, including subscriptions and professional fees. You want a brief description, the cost to you, the employer, the amount made good by the employee, and the cash equivalents. So that could be professional subscriptions to a golf club, for example. You'd be given a brief description, entering the value in them 3 boxes, and depending on whether it's a brown box entry, that could be liable to class 1A, or if it's a blue box entry, could be liable to class 1 via payroll. And you've got a 3rd box there: income tax paid but not deducted from directors' remuneration. Okay, that value of the tax paid has to be entered there in box 15 in section M, and it'd be liable to class 1 via payroll. And loans written off, which I mentioned earlier, that would also be a brief description: loan waived, loan written off. Blue box, liable to class 1 via payroll. And we need to make sure that we work out what category of NIC is liable. Is it class 1A? Is it class 1 via payroll? Now, at the back of the 480 booklet that HMRC provide, it gives a table and it tells you what is liable to class 1 and what's liable to class 1A. It's worth utilising that for reference. Now, if we're paying subscriptions on behalf of our employees, if it's connected to their job, you should have a look at list 3 that HMRC provide to us of any professional bodies that are approved by them. That means it can be covered and it will be exempt from the benefit in kind code. However, if it's listed on list 3 and it's not, and it's being paid by our employer, but it's not utilised for our profession, then it would be liable to tax and NIC and charged as a benefit. Section N, this is where we cover expense payments made on or behalf of the employee. And depending on what them are, will depend on what box that we report them in. Again, you've got 3 boxes here that you need to report. As always, MBKB's core priorities is people, purpose, passion. For more information, contact us, and here's the various websites. Thank you for attending. Hopefully you've enjoyed this session today and you found it worthwhile. Bye for now.